All right, guys, should be live right now. Just let me know if you could hear me nice and loud and clear. The last time there was a little bit of an echo, so if there is a slight echo right now, I do apologize for that, but haven't really gotten down to what the cause of that is. My microphone works completely fine during the other videos. I got a new microphone, so it should be okay now, but when you hear me, just press 1 and yeah, there we go. All right, so what's going on, everybody? Okay, hopefully everyone is having a decent weekend. You know, depending on where you are, things might be a little bit calmer, or you know, just compared to where I am right now, things are a little bit nutty. If you're in the United States, you understand what I'm talking about. So we're just going to kind of try to keep this casual. This is going to be, you know, like our typical live streams where we're going to go over, you know, a little bit about what's going on with Bitcoin, take a look at some of the altcoins. Obviously, I'm going to touch on the new Discord that we've set up. Thanks for all your help, guys. 11111 and 71. So what's going on, Dave? Okay, what's going on, Madarad, Frog, Ash, Chris? Thanks for stopping in, guys. Our Daily Bit. So we have a few people in here. You know, we wanted to, Josh and I, when we started Blockroots, we wanted to have obviously a really robust community page, you know, separate from our Blockroots platform. And, you know, I hope you guys are enjoying this. You know, obviously I just set it up last night. The Mighty Networks community was nice looking, but in terms of aesthetics, but it was all form and no function. So as you guys can tell, I can see, you know, how much you guys really enjoy this compared to Mighty Networks. It's just a lot more free flowing. It's more conducive towards a community as a whole and just communication in general. And the one thing that we, hey, what's up, CC? The one thing that we really wanted was a professional community, and I think that we already have that with our members. That was sort of why we had an aversion originally towards going with Discord. What's going on, Masked? That's why we had an aversion towards, you know, going with Discord, because it has like this gamer connotation, and it's sort of a I don't know, it's not as professional as a platform than something like Slack or some of the other alternatives. But the truth is, there's a reason why a lot of crypto platforms choose to use Discord. You know, the market makes a decision, and, you know, the market is never wrong, so it's sort of like wisdom of the crowds in that sense. So the Discord right now, now that it's set up, I think that it's going to be incredible. You know, make sure that, I know all of you know, on the Blockroots page, you know, on the other community, you see the, you know, the house rules. You guys already understand that. We just want a very professional environment. You know, we don't want anything that you would not say in front of your mother or your father. We want to keep it as clean as possible, and we want to cultivate growth with all of our members. We want to try to obviously identify as much signal as possible while reducing as much noise as possible. So we're trying to keep it as professional as we can, right? And have fun and be what a community really is, which is, you know, a chance to get to know each other, work together, and hopefully develop together. So I'm just going to run through these features before we get into the analysis. You know, community features, this is just describing what each one of these rooms are, right? So for the free trial, this is for anyone that is coming on to any of our YouTube videos, or you know, stumbles upon Blockroots. We're going to offer this free trial. Essentially, you know, if you go on here, and if you're not a Blockroots member, you know, you guys are Blockroots members. You go into the trial area, you'll type trial. I'll look at the comments in a sec, guys. I just want to run through this. You'll type trial, and then you'll get a 2-day trial, and you get a trial to the Discord, which obviously doesn't include, you know, the 150 videos that we have on the platform, but by now all you guys, I'm sure, have run through most of that. The market profile and order flow course is the next one to be posted in the coming week. So that'll be a whole, you know, ton of new content, and rolling that out in half. So first getting the market profile out, and then throwing the order flow portion of the course out, just so that there's a slight buffer between them. And I'm not talking about a week or anything. I'm just talking about, you know, not throwing it all on at once. Then the updates and announcements. You guys are familiar with this. It's the stuff we used to post on the top of the Last Mighty Networks page. Trading floor. This is where, we all kind of, as they say, shoot the shit, right? Where we're all going to go back and forth. And I love this already. I love that you guys are talking so much. Member introductions. I think this is great that you guys have gone through and introduced yourself and really given a background into a little bit about you. I've separated the Bitcoin and the altcoin pits. I've separated, yes, exactly, no yucky pictures. I've separated Bitcoin pit and altcoin pit. So what I want to try to do is keep, the technical, fundamental stuff that, might really kind of clutter up the trading floor. Try to keep that as much as possible in its respective channel, right? So if you have some TA, not if you have questions, right? But if you have TA that you want to post or something you notice, put that in the Bitcoin pit, and with altcoins, anything altcoin related can go here. Traditional markets, I'm going to start developing this. So what we're going to do is we're going to start delving into some things that I think you guys should absolutely know. Obviously, none of this is financial advice, but it's really important how you understand how crypto sort of interacts with global markets as well as it matures, because it is, right? It's just a kid trying to find its identity right now. So literature, this is going to be a curated source of all the stuff that I normally post on the Mighty Networks and on Twitter. All the books that I suggest that I made this list with, I'm going to find these in PDF format and I'm going to post them on here. So far we have the Hull Options and Futures book. Okay, that is a textbook that I had to read years ago. You could consider that just kind of school coursework. It is long, it's kind of, drab, but if you go through the options and futures portion of it, you can get a ton of stuff. You don't really need to get into, credit swaps or bonds or anything like that. Trader checklist, this is obviously what I shared for you guys as far as, let me get out of the screen, where'd it go? All right, let's go back to that. That's, excuse me, other screens are confusing me. That is this checklist that I shared with you guys. All the questions that you want to ask when sort of looking at the chart, right? From the top down to the lower time, from the higher time frame down to the lower time frame. So I shared this on the Blockroots page, but just in case you don't have it, it's always there. This is something that it looks like, by the time you start with this, the trade might be behind you by the time you get up to here, right? You're looking at a setup and you're going through all these points, and then, next thing you know, the trade is kind of behind you. This is all stuff that this is hopefully, ideally, is going to be things that are kind of second nature to you. I always give the analogy of learning how to tie your shoelaces, right? If I was to write it out without showing you or any of that, then you would have no idea how to do it, right? So this is just a very useful checklist to go through. And programming, we're going to have a separate programming page if anyone wants to learn about Python or anything we could share. Order flow resources, as you can imagine, anything that's useful for order flow, market profile. This can be outside sources, can be outside videos. It doesn't matter. Anything that's helpful, right? We're not just trying to sell our product. We're trying to make people better off so that ultimately, you could leave this platform and maybe just hang out on the community page. So the market update, this was last night I put this update out, okay? Did not really get that at all. What we got right here was a very clear sign of divergence. Don't step in the way of that. Game footage, share your success, share your failures, feedback, and media, blockchain, and the den, which is not developed yet. So let's go over, now that everyone is familiar with that, and we're really happy that we have that. So it's just so much better already. Let me just say hi to all you guys, make sure that, I have an idea of who's here. Okay, Clown, CC, Mass Ninja, Andre, what's going on? Yeah, we'll talk about that, Andre. Okay, Kalev, what's going on? Saman, all right. You're welcome for moving for the Discord. I'm sorry that we didn't do it sooner, honestly. Dr. Luke on call. Hey Luke, this is not Josh. This is Ryan. Ryan, okay. It's very late in Cape Town. It's okay. Cape Town, one place I don't want to visit. My aunt works for the Department of Justice. She works for the Pentagon, and she used to go cross seas all the time. She said that Cape Town was her favorite place in the world. That parts of it were, different than others, but for the most part, it was beautiful. She said it was some parts were a little scary, but she was there on government business. Okay, and then Ken, what's going on? Okay, so let's go over where we currently sit. It's Sunday, so on Sundays we do the higher time frame market update. Now that Discord is all upset and running, I can get back to really doing everything consistently. I feel like everything's good now, so I'll get back into the flow of things. So anyway, where we sit in the higher time frame, we go over this, and we've gone over this for the last few weeks because it hasn't changed, right? And I'm just going to fly through this portion. we're still at this major contextual level. Okay, major contextual level within market structure, higher time frame resistance, the fat portion, the meat of this large consolidation structure in terms of volume, that has acted as our ceiling now for the last, going on. This is, since essentially we're looking at the breakdown, September 2019 all the way to where we currently are. What's going on, VLX? So this is the area where, it is very obvious from this point, if we move through here, that we're probably going to at least test 11,500. So aside from that, there's a few, a lot of the time for the last few weeks I've been saying that this is, how do you join the Discord? Are you in the Discord? Is this a, hold on a sec. This is a public video. This is not a private video. Okay, anyway. All right, this is a public video. Okay, so little spread, you could, blockroots.com, or here, I'll type it in. It's at blockroots.com. And if you want, if you find us on Discord, you can go ahead and, so go to Blockroots Discord. You can go ahead and, let me just find that because I didn't realize this is public. Okay, you could do a trial there. All right. So anyway, now that we got that in hand, and this is a public one, okay. All right. So anyway, higher time frame resistance. I've been saying for the last few weeks that this is a major contextual level, right? So a major level within market context. This is your higher time frame structure. If you're taking any short-term positions, you always have to know where you are. So if you're taking any longs in position up here, you just have to keep in mind that everything needs to be taken sort of to an extreme of, in this case, 10,250 to 10,500. You just have to keep in mind where your wall sits, right? I talk about it like an outfielder who's going for a fly ball and is not looking to where the wall is as he's going back, right? American baseball, or just baseball in general, right? Because they play baseball all over the world now. So anyway, we're at this major contextual level, and I've been saying on Twitter and on Blockroots that it is contextually, it is a good level for a short, right? From a contextual risk-reward standpoint, it is. When I say that, it doesn't mean that this is the place to short. Okay, what this means when I say contextually this is an optimal area to short is that if we look at high time frame market structure, the local areas within market structure are here, right? So high time frame levels, major swing points. Which one are we closest to? All right, and this is probably the most simple way to put it, right? Which one are we closest to within the higher time frame? Arguably, we are within this cluster right here. So higher time frame cluster for the last, at least going on over a month now. And if anything, we're closer to a resistance than we are to any support. So now just getting rid of some of these others. So we are closer to higher time frame resistance than support. Contextually, this is a better area to short, right? When we're talking about how we define trades from a contextual risk-reward standpoint. So what I'm saying is that as long as we're under this and it's still resistance, so right now it hasn't become this yet, right? So as long as we're under this and still resistance, it is contextually a better area to define a short than it is to define a long. Now, make sure you understand that. To define one, it doesn't mean to take it. So what I'm saying is that ultimately, this gives us a better risk reward for any type of short position, whether it's to this support or this support or this support. None of these are obviously what I'm thinking right away. But contextually, to the next support from the most local resistance, it's offering a more attractive short. It only changes when we're above, because we're in such close proximity to this level. This only changes and goes back to being a better contextual level to long on the higher time frame when we're above this higher time frame market structure. Okay, because at that point we're above a major contextual level, we've overcome this higher time frame resistance, and then a higher time frame longer term swing position that's a long is attractive from a risk reward standpoint. So you have to really understand when I say contextual level, okay, you always have to keep in mind context, right? What's going on in the market? Where do we sit in relation to greater market structure? You never want to be stuck in a position where you are looking at a chart just like this and having no bearings on where your surroundings are, right? Where is the storm, right? You're in the middle of the ocean right now. Where is the storm? Are you going into it? Are you sailing right into it? Are you sailing away from it? Well, right now, if you're along, you're sailing right against the wind, right? So you're trying to swim upstream and to not be crude because I don't want to, but I'm going to be a hypocrite because I said I don't want to be crude in the Blockroots channel, but you're pissing against the wind, right? When you're buying into resistance. So this is for higher time frame positions, right? For longer term swing positions. Up until this point, we could still take intraday trades, right? I've been taking intraday trades regardless, right? And these are just short rotational plays. These are anywhere from $150 to $200. So at no point do you have to consider that, you can't take any longs. It just needs to mean that, your longs do have an expiration or a half-life, right? So that's where we sit on the higher time frame market structure. We're still under resistance. Now, the one thing, because, I have to point out a few things, right? There are arguments that this is a distribution. And distributions and accumulations, they look very much the same. In commodities, commodity futures specifically, every long means that someone is opening up a short. So in equity markets, that's not necessarily the case. When you buy a stock, that someone is always short, right? It means that the market maker sold you the stock, or you bought inventory, but it's not necessarily some individual that is necessarily betting against you. Of course, it's a zero-sum game and there's parity, but it's a little different. So in this case, in equities, fear is to the downside, right? The markets grind upward in equities and they crash down. If we're looking at the ES, which is E-mini futures, markets grind up in the equities market and then they crash down. So that's why put-call skew is the way it is, right? It's negatively skewed. There's a lot more implied volatility in puts is much higher than implied volatility in calls. So this is how markets behave, when fear is to the downside, right? Fear is to the upside and to the downside with commodities, right? Because you have to think about what I mean by fear. If you're in a long position, your fear is, let's say you get long right here. Your fear is anything that goes this way, right? Fear causes you to sell your position, causes stops to get hit, causes the market to move down, right? You're afraid, if you're long, of price moving against you. If you are, let's just say, short, all right, you're short up here, where's your fear? Your fear is up here. You don't want the market to do this, right? So fear moves markets, right? If you are selling because you're long and everyone's selling, we have one of those liquidation events, the markets crash downward. In commodity futures and Bitcoin, because it's a lot of derivatives, or there are a lot of derivatives, when shorts are crowded in position and the market moves against them, their fear makes the market crash upward. So that's what causes short squeezes. So in this case, bottoms and tops tend to look the same because there are similar energies at those levels. And I don't mean to get all sort of, woo-woo talking about energy or anything metaphysical, but what I'm talking about is the motion that creates these movements and creates these patterns. It's the same, but in the opposite direction, right? So if we're looking at, this looks like potentially a distribution at a top, might be a near-term top. We just invert the chart and we get sort of an idea of how this looks with less of a bias, right? So does this look like it's going to continue downward? Does it look like it's going to bounce upward? So in this case, it's kind of difficult to tell, right? Because the market has been consolidating here for the last few days, right? This has been kind of nothing zone. And if the market, after being heavily rejected, okay, so there's two points I want to make about this. This pattern is pretty popular in crypto and markets and forex and everything, right? In a liquidity engineering pattern, you have stops are hunted up here, you have a swing failure, grabs liquidity, crashes back down. You want to see this take place very quickly, though. If the whole purpose was to orchestrate liquidity and move the market downward, you want to see that this market moves at least back down to the low of this range of this consolidation, right? Because again, what happens at this level? Let's just go over some of the sort of structural dynamics and mechanics at play. At this level, you have to imagine that you have someone who got short up here, okay, their stops are above this level, right? So their stops are above this level. You have breakout longs that stops are above this level too. So someone who's sitting on the sidelines might say, well, I want to buy if we have breakout. I'm a breakout buyer. I'll put a trailing stop on. They buy at this break. They're automatically entered in. Their stops, when they're long, are placed within the structure somewhere, okay? Any shorts that placed here or here, their stops are up here. If they were stopped out, their take profits down here were removed. So the market can move very quickly through this area. So when it doesn't, it just it's cause for concern. This kind of move should move down very quickly, and it did on BitMEX, right? But it came back upward. So one of the more important things we try to do in Blockroots is always identify what side of the range we're favoring. Now we're starting to favor the top side of this range, right? We just came up off of this low, okay? I said that, if we approach 10,100 and we're back up at this level, I don't think we're going to break down. One thing that's really important to understand is sort of what the trend has been. And past highs have rolled over. Okay, they've rolled over at the highs. Okay, we haven't had any kind of very meme-ish obvious swing failure that went on to break down. If anything, this kind of pattern might be the one that tries to provoke you into selling, but this is the one that moves upward because we haven't seen that at highs at all in the past few months, in the past few cycles. We've seen just a rollover where buyers become more reluctant at the high and sellers become a bit more aggressive. But it's not necessarily that sellers are overpowering buyers. It's just buyers are becoming a little bit more reluctant. The high rolls over, market kind of falls under its own weight, and then it's just a liquidity cascade as stops get hit. This is a little bit different. This looks like it's trying to tell a story. It's trying to tell you that the market looks weak, but the market keeps marching back upward. So these kind of things, I shared this on the Blockroots page. I think that we'll just go to it real quick, just because I want to highlight some of this stuff as I go through. So I know some of you guys have asked me to do that. Let's go to roadmaps, and then we'll go down to open content trading videos, fake out, dump, pump, continuation. So in this case, I said continuation is never clean. You have a fake out dump, but the market tends to favor and grind back upward. So if you guys haven't watched this video, this is on open content trading videos. So in this case, I'm a little bit leery, right? I'm taking intraday shorts. Okay, from yesterday, we had a very obvious delta divergence. So this was very obvious. I don't miss out on this, all right? So don't miss this opportunity. Lower high in price action, aggressive buying, increasing but not moving price. Someone is on the other side absorbing this, right up here. This is all taking place within a very tight range, all right? But then at the bottom, ended up closing this position out, and I should have shared that but I didn't take that on the Blockroots account. I took that on my personal account, and I was actually, this is not that brag worthy. So I closed this position out after we had this divergence, all right? So right up here, so this is just for anyone I didn't realize there's newbies on here. Market is continuing to aggressively sell down. This is cumulative delta divergence. It's the difference between aggressive buyers and aggressive sellers. This is not a lagging indicator. This is true right from transactions, not pre-transacted. This is after buys and sells. And a more aggressive selling on this side, but price is actually higher. So what it means is someone is actually bidding this up and they're absorbing it, whether they're hidden or they're obvious. So the market is going to seek liquidity, right? So in this case, it found buyers down here and it's going to auction back upward. So this is the higher time frame range we've been in now for a long time now. Okay, we poked out of it temporarily, but came right back within it, and we rotated down to the low, had this divergence here. Now we are right back up at this level. So if you wanted to know what levels you should really give weight to, it's levels that are prescribed from from market generated information, right? We're not just kind of arbitrarily drawing levels at wicks or anything. These levels are exactly from the distributions that we clump together. Okay, so the value area high, the value area low of the last few days, and then if we combined all these, you'd get this 9,800 level that goes all the way back into a previous range as well. So that goes all the way back here. So these are not arbitrarily done. This is actual levels that we have been respecting, the highs and the lows, the levels where buyers and sellers have turned, where we've had mean reversion, and it has worked the entire way since. So this is just where value is developing, and that's what we're always trying to do, define and find out where value is developing. And in this case, right, the market is still making an attempt to march upward, but I have to get back to it before I lose my point. So I ended up closing out my own personal discretionary short position from last night, but I'm still in a short position on the systematic strategy. So the Blockroots Alpha Trend strategy that you guys have access to, that I've now integrated into Alpha Algo. It's been in testing on a separate platform, on Mudrex, on Alertatron, but I just worked with Coin Apocalypse, who runs Alpha Algo, and I'm starting to implement there too. So that'll be able to have, you'll be able to have access to that. So this is a very simple trend following strategy that has an incredible track record. It's kind of obscure, right? It's not popular at all, so it's not populated. There are, not a lot of people trading the same sort of same sort of setting and kind of buffering or reducing or eroding this edge. It beats the market. Okay, it has beat the market since inception. It's beat the market on all time frames that we could really test it on, and it's beat the market now since in the past month. But it does have drawdown and it does have positions go against you, and the benefit is that you're not going to mess with it. So it is underwater right now because I think the last entry, if we just look at that on the 2-hour time frame, okay, is the last entry for alpha trend was right here. So now it's a little underwater, but that's okay because it gets chopped up in these sideways periods. But it's all right because the problem is when you start messing with this by hand, right? When you're starting to actually meddle with it and not just let it do its thing. So it is what it is, right? Let me just get back to it. All right, so let's just put on the lower time frame levels now, and we'll get some questions, and we'll look at some alts hopefully. So still respecting the higher time frame levels that we've had previously, right? And the lines in the sand really haven't changed much. Last night on the Blockroots platform, I gave a little bit more of an aggressive area where we could have started to get in position a little bit sooner. Not to take the position here. I don't advise taking positions where I get in positions. I don't advise getting into positions, right? I can't give you financial advice, but I don't like to kind of set you up to be in a position that I might find myself to be in a little bit more risky, or set you up for that at all in any way where I say that I think it's a good short and then you get in, but it was one of my lower expectancy plays and I end up taking a bit more risk anyway. So the ultimate breakdown that we shared last week, and I think it's been now for quite some time, it might be over a week or maybe slightly less, it's still this monthly swing high level and this 7-day range composite that goes all the way back to here, right? So we'll just put this on the 4-hour chart. This 7-day range composite goes all the way back here. Okay, so really it was derived from the first 3 or 4 days within this structure, and I extended it from there, and it's been respected ever since. So price is finding a value areas. It's finding developing value, or it is developing value. It shouldn't be surprising when it seeks that level again and it's accepted, right? Because it was a level that buyers and sellers previously accepted within. So think about it as like these value areas as levels that buyers and sellers are comfortable in. They're comfortable duking it out there. Okay, if we are on opposing sides in trench warfare, if I'm on side A and you're on side B, are we in the middle ground? Okay, are we duking it out in middle ground? Am I in your trench fighting with you? Right? Do you have the upper hand? You have to think about, now I have to start giving you a way to visualize this because the first way it didn't work. Imagine if we're both fighting in the center of point A and point B, and that's the valley. Right? We're on even ground there. We're sort of in agreement, okay? Or we're in neutrality. Each other side of a trench is sort of like a raised area, okay? So this is your dominate area, side B. This is a horrible analogy, I think, because I'm starting to lose it. This is my side, okay? If price comes to B, right, A is more comfortable, right? There's more imbalance because price is trying to take the high ground. Why did I bring this to like a warfare setting? If price auctions back the other way, it's trying to take B's high ground. So it's imbalanced, right? I think I should have just stuck with that. Sometimes I think I just try to I try to be poetic and say something that maybe will find itself in a book someday. and I'm not even serious, but anyway, so this is the area where it's been accepted previously. It should make no sense that it should make sense that it sort of fits nicely upon returning there. So auctioning between this level, ultimately the breakdown level is still most reasonably highest level of confirmation below this previous monthly swing high. So this level is right below this previous value area, okay, which is higher time frame support that we've come into multiple times now. It coincides and is right next to this. There's a great amount of confluence between it and this monthly swing high. That monthly swing high is just, for anyone who's not following what I mean, that's just this area right here. So this was our most local area of market structure, which we're now back above, right? So we're now back above this level, treating it as support. So the best case for a short, where you have the most certainty, but obviously it means some of it is behind you, is if we break this level, right? Getting aggressive here wasn't necessarily the best idea. We had a divergence right away. If you see these things, see, the benefit of looking at order flow is that you don't need to get chopped up. When you see a delta divergence, you know immediately that someone is offsides, right? You know that immediately someone is holding price back. So if you're betting against that, you're saying that we're just waiting on the next sell that's finally going to move it through, and that what's shown up so far is not substantial. I think you have to go with the evidence, right? You have to go with what market generated information there is, right? So we're seeing what's going down, we're seeing who's winning the battle, and if price is not continuing down, but sellers are continuing to sell, who's left to sell, and they're not doing a good job of moving it down, so price only has one place to go. If we're able to break this monthly level and the 7-day range composite, you start to see that we gain acceptance down here. If we're starting to break down, we're not able to regain this level. This is the area where I would probably try to sell rallies, right? Because at least now I can define my risk back above this structure. Defining my risk in an area where it's not arbitrary, it's an area where my thesis is wrong. Now, my thesis is wrong up here for a short because my thesis for a long is up here, right? So if we're above this range, I don't care really about this level that much. I think that it's reasonable to take risk and say that a longer term swing position might be placed with your stop at the low of this range, okay? And you are looking at the retest of this high or this structure, and this might take some time, right? Price moves sideways. It doesn't work on hour time, it works on market time. But if you could define your risk and use this level as a buffer, so that's the purpose of frontside and backside execution, is that it offers you a clear idea of your thesis being right or wrong. This, I think, moves sideways if we're able to get above 9,800 and ends up moving up to probably higher prices at that point, at least 10,500 and probably even further than that, right? Target beyond that, higher time frame structure. Next sticky area is 11.5, right around 11.5. So 10,000, rather 9,800. Gain acceptance outside of there. Looking along that. But until then, we're still in our previous value area that's been a value area for a long time, right? So we're kind of back in agreement. And I don't like to take positions between here. Another thing to point out is what we did do is actually close this CME gap. So I just want to briefly touch on CME gaps. I was having a conversation with one of you today in the platform. We were saying I think it was, who was it? Oh, Andre. Okay, so I think it was Andre, right? And D86-86 must be a robot that is in the, I think that was the number of my toaster oven. But we were talking about gaps. So the thing about gaps is, you could argue all the theories behind it that you want. Problem with gaps is that all gaps fill, right? There's a concept of all gaps fill. Well, not all gaps fill, but 99% of gaps fill. Okay, 99.9% of gaps fill probably. But we just don't know how long that's going to take, right? If we have, a gap that occurs on higher time frame market structure and it's left all the way up here, right? CME gap like this. Okay, there's no telling that this is going to fill tomorrow, next week, or a year from now, right? And as long as that is uncertain, then it's not actionable, right? It's hard to define a position around that. What we can say, though, and think about this as game theory, or sort of future is path dependent even. The closer we are to this, the more likely it is that it's going to fill. The further we move away, the more likely it's not, right? The problem is that, and that sounds funny, but just think about this real quick. If we have a gap up here, okay, and higher time frame resistance is, higher time frame support is right here. Here's our gap, okay? Now, higher time frame support is right here. Let's say we're bouncing off support, all right? We're bouncing off support. What if you have this gap and you're currently in a short position and you're thinking that, say we're meddling around here, you're thinking we're going to break down, but now you see that we're really close to this gap. You have traders that are buying right now because they're thinking the gap has to close. You have other traders that are also thinking, damn, I'm short, the gap has to close. So those two behaviors are going to reflect themselves in what? They're going to reflect themselves in actions by clicking, the buy or sell button. And the closer we are to this, the more likely it is to fill, right? It's sort of a, think about it as, sort of behavioral finance, right? Sort of one of those effects of behavioral finance or behavioral psychology, right? So what we're talking about is the closer we are to them, the more likely they are to fill. Once this opened today, it filled the gap, right? We were already there before it happened. So that's something to always keep in mind, right? So right now, back within value, not a whole lot we could go off of. One thing that I pointed out last night was this day and this range are very tight. So we're close to the break. We're close to it. the same way that we look at a daily range, let's say that we're looking at a daily range and, here's one day, here's the next day, here's the next day, here's the next day, right? We're compressing. Some of them are inside days, maybe some of them are not. Each day has a smaller range. We know that the intraday break that follows from this, okay, if we finally get a break of one of these levels, a break from balance, it'll probably carry to the exterior of whatever this cluster is, right? We know that this break is probably going to lead to the next sticky area. Maybe it's up here, maybe it's down here, but it's compression going on in the lower time frames. And if that drawing's funny, we're looking at just something that's doing this, right? Within days, if this was a line structure. It's compressing over time. Maybe higher lows, maybe lower highs though. We just know that there's compression. So when we're looking at that on the daily structure, okay, so here's an example of not balanced, but we have multiple days that are very tight. Yesterday, before today's candle, very tight, okay? What we're looking at is an average sub-period rotation of 32. Here are the average sub-period rotations of the last 69 periods. The lowest one was 28. So that means that the average sub-period rotation of a 30-minute candle is, on average, it's actually 58. Okay, this was 32. So one standard deviation of that is actually 26. Okay, so we are one standard deviation below the norm. Our volume value area, I should have had Python open for this actually. Our volume value area is also far below the norm in this case as well. Okay, so I don't want to lag right now, but maybe I'll just pop this open in the meantime so we could establish what that value is in terms of the average. Very low numbers, right? Range, volume value area, TPO value area. We're looking at the range of the value area. It's just very low, right? So it's very low. We're looking at a very compressed day. Not only that, and I'll find this in a second. I promise I'll get this working properly and we'll pull that up. Okay. So not only that, do we have a compression on these days, okay, leading to, potentially a break from just one day. We have a very tight range. So this range, okay, this TPO value area of this composite is 220 to 230. Previous composites we're looking at over 300, right? So even by norms, the composite is very tiny. So there's a very tight range, and we're going to expect that after we gain committance outside of this level, that we're not going to spend much time kind of sitting around, right? You could expect that we're probably going to visit here or revisit here, right? Or initially these levels between. So just the idea is compression. You go from a period of low volatility, compression to expansion, okay? So let me just pull up this really quickly and bear with me. I'm going to try to do this as fast as possible, even though I am completely new to Python, still new, still a baby. Let me just get the average for the value area. Okay, so now we have almost there. I'm just trying to set all these. Okay, here we go. So volume value area, let's see what the average is. Okay, and let me just make sure I have that labeled properly. Okay, vol var, okay. All right, so the volume value area is actually, in this case, $237, okay? The volume value area yesterday, as you can see, is slightly less than one standard deviation off the mean, right? Or off the average, off the norm. And we're paying attention to this kind of stuff, right? We're paying attention to norms and how we're behaving with regard to those norms. And paying attention to these details should be no stranger to you, because when you're looking at these charts, you're looking at distributions, right? Ultimately, we're looking for balance, right? We're trying to find whether or not price is in balance or out of balance. And we're trying to sort of place all of our build all of our context along with weekly structure around what's going on within these distributions, right? So hopefully that is pretty clear. I know that some of you now, I could tell that some of you are new to Blockroots, so or the platform I've been sharing right now. So if you come into the Discord, I'll be more than happy to key you in on some of these concepts, and we'd be more than happy to have you as a member. We have a very professional community, and that's something I'm really proud of. It's just people that are trying to become better traders, better investors. We're a thinking group. I like to say that it's the Dead Poet Society of trading groups. Okay, we're here to leave better than we came, right? So that is Bitcoin. Let's take a look at some of your questions, because the chat is moving now and I haven't been paying attention to it. So tested the high of that. Let's see if we could find a balance area within the structure again. Let's see. The weekends are, just so you know, low volume and dominated by algorithmic activity. Okay, so they're bot controlled, they're thin. It's easier to move them with the same amount of capital that you normally put on the weekdays. You're going to move the market more on the weekends. All right, so let's see. Good Sunday, cup of coffee and Blockroots analysis. Hey, what's going on, Renan? Happy to help you along with having a decent Sunday. All right, let's see. Happens sometimes. Robot audio. Okay, so does anyone have any questions? Okay. Yes, numbers might be too small. I understand. It might be a good idea to. My screen is very big, so that's that is a nice liquidity grab. So far, looking like that. Just have to be careful. Nothing that I would really get in position for right now. Let's look at today's distribution. If we're just gonna look at both of these now because we're in a composite, potentially coming down to test out that 9,500 level. But mean reverting back to the point of control is sort of where you would target anyway initially. So looking at price to probably settle right around, I would say settle right around here at least temporarily. If we get the short setup faster, hey, that'd be great, right? Because like I said, my systematic strategy is right now slightly underwater. So does anyone have any questions? Because I just want to go over some questions. Take a look at, okay, so market open right now. Oh, market's not open yet. What am I looking at? Oh, wait, market didn't even open yet. Okay, I'm looking at, yes, the gap will close. Why? I was thinking the CME gap closed, but it will technically, there'll be a slight gap, but anyway, looking at the ES, market's not open yet. And then some of the alts maybe that you guys want to go through. ETH USD, ETH the higher beta, Bitcoin at times, but not doing, ETH has a very clean structure, I'd say, at least with regards to where the high is. If I was going to ask you right now to look at this chart and tell me where and you see those lines I had on this chart, that was saved positions that I was going to short that I never actually did end up taking. I left previous ETH shorts on more recently, but actually I haven't updated this chart since even before that. So we actually ended up coming up all the way to this level. And right now, very clean structure, though, in terms of ETH USD, right? Very clean structure. Consolidating for the last few days within here. Right back within the range, though, right? So outside of the range, back within the range, still no bias, really. All right, so until we gain acceptance outside of the range, and you're looking at right now, this is on Kraken, so I actually would rather look at a different chart on Kraken as well. Go to Coinbase. Speaking of Coinbase, those sons of bitches. So ETH, though, still clean. Still very clearly defined highs, though. ETH is still at higher time frame resistance, right? So ETH still at higher time frame resistance. Technically, same thing as Bitcoin, though. ETH is at the structural level from a close standpoint. Underneath it, on a weekly basis, on a weekly case rather. Oop, pressing different buttons that I shouldn't be pressing. Bitcoin is still slightly below it as well. In terms of, where am I looking right now? Here we go. In terms of the ultimate high, that monthly level is the level that I was talking about. We were right above. I think I might have accidentally said weekly level. So it's easy to get bullish right now, but it's way better of an idea to just get involved after the trend has changed, right? The trend is telling you the most honest story based on what buyers and sellers are doing. Okay, XTZ. Really, I think you like Tezos, Ken. Were you the last one to also ask about STZ? I don't blame you for liking it though, right? It's it's one of the best performers. It's up there with Link, right? In terms of the chart, they look pretty damn close. Great degree of correlation with cryptos. In terms of Tezos, for me, the most important thing is context. And for me, until we're above higher time frame market structure, I need to have a really good entry. Anywhere between that, at least even consider a long. The best entries were arguably down here because now at this point we're above a swing high. So maybe your argument could be that we move up to this level. But in any case, with alts, I like to get in better, right, over time because alts are a little bit thinner. So I don't want to chase anything with an alt because if I lift the offer or smack the bid with an alt, depending on if I'm buying or selling, it's going to have more of a market impact. It's going to have an impact on my slippage. So we're at higher time frame resistance. context is everything, right? Always keep in mind where you are within the bigger picture, because up here there are a lot of people that are going to be looking, if they're not, if they're not already taking profit, to add into a short position again, to maybe protect their current short position. And you also have longs that maybe have been in here that will likely start taking profit up here as well. So think about all the ways that selling pressure can be, that selling pressure will be manufactured just from that alone. Link showing signs of exhaustion. It's dangerous to say that with alts, right? Because, these are Link in terms of market cap, still a small asset by big picture standards. If you saw this chart in equities, you would know what the deal was. You would know that equity all-time high after ranging like this, after being confined with this level, you'd know that a break of that without falling back within was something to start getting involved in. And it doesn't mean that you need to be in position perfectly. You start, if you start scaling in this, typically you're going to have some follow through. And, at that point you might want to consider putting on some type of trailing stop or some type of volatility stop, because it's going to be really difficult to assume where the turning point is from a structural standpoint, because you don't have anything up here, right? So it's just price discovery mode. So it's easy to say that this chart is showing exhaustion because you think, well, it's going up. And, if we just look at some of the obvious things that the market tells us from structure alone, let's just take this log chart off. We see that very large move, big move again. Moves are becoming a little bit more compressed, right? So you don't need to be a genius to see this, or to see on RSI that it's probably indicating that, RSI on the weekly is probably slightly decreasing, right? Because momentum has to slow down at one point. Doesn't mean that this has to make a big turn down. With Link, you have very clear structures, at least. On Bitcoin, you have higher time frame support, ultimately where we're at right now. So higher time frame support at this cluster. Next level of support right here, and then just all the way down you have levels of support. You don't want it to come down here, right? But there's no reason to think that Link is going to really just roll over. But markets do lose momentum, right? Things do need to sell off to go back up. Bitcoin needs to sell, right? Bitcoin needs to move down because people need to bet against it going up to help it move up, right? People need to short it so we can have these squeezes that bring other people into the market and to clear out some inventory and some selling. So yeah, in the past, BTC has ping-ponged between acting like a risk-on and risk-off asset. Let's see, with equities booming and now gold pulling back, is Bitcoin now falling a risk-on asset, do you think? Seem to be following gold for a while, maybe no. So, the correlation with short-term correlation, no long-term correlation, other than maybe, liquidity as a whole, so global liquidity levels, Bitcoin benefited being a risk-on asset over time. In terms of the correlation right now with something like the ES, and I say the ES rather than the S&P, is because the ES is, that's your E-mini futures. You're going to have access to a chart that's not, in the overnight, the way the S&P is. So at times, if we're looking at a chart at night, so I just want to tell you about the ES so that you can look at it, even though you'll probably have a delayed feed, right? So the ES right now making a march upward, risk is bid again. Yes, it's a little crazy, right? This is, there's a lot of people. So there's one thing about, I look at levels that are structural levels within context, within market structure, to place good trades from a risk reward standpoint. But once this story changes, I don't hang on to it. I don't hang on to why, or, get upset and not get upset, but there's a lot of people on Twitter that it's almost like they can't believe this is happening, that markets can be disconnected from the economy. And it's been like that for quite some time, right? That markets have been disconnected from the economy. That's just, think about the concept of, price to earnings ratios that are high, right? What we're saying is that, markets do get very expensive, and they can remain expensive for a long time. And people buy things, price goes up. The whole Goldman Sachs thing about, needing someone else to consider it more expensive and continuing to buy it at higher prices is kind of ridiculous because, yeah, that's obvious. But once this broke this level, it looks like it's just going to target this previous cluster up here. The problem with this is that risk is being bid. It is being It is highly, it is being taken advantage of by a lot of smaller speculators right now. There are, for example, there is a lot of call buying, upside buying, trying to take advantage of convexity and potential, infinite gains, because you have to think about it. A call has infinite upside, limited downside if you're buying it. It's highly convex in your favor. When someone sells a call, market maker, options market maker sells a call, they have to hedge that. They buy the underlying. So the problem when you have a lot of options activity, so small options activity, a lot of small call buying, a lot of call buying in general, is that all those dealers that are selling those calls, getting rid of that inventory, they're hedging their positions. Let's say they're selling calls against the S&P. They're hedging it by buying the index, right? By buying stock. So this actually ends up moving the market up. And the problem with that is, when the calls expire and they expire out of the money, if we have options, if we have inventory that is just sitting, there could be a lot of selling pressure that's added to the market once it's unloaded, right? So right now, Bitcoin is correlated to risk-on assets. In terms of gold and Bitcoin, there was apparently, as of recently, and I say apparently meaning just from looking at the chart, it looked like gold and Bitcoin started tempting to move in tandem again. We're looking at Bitcoin on the daily chart. We're looking at gold on the daily chart. I think that this is an honest interpretation, saying that these two have been trading in a very similar manner. Only for a very brief amount of time did it get out of whack, and that was when everything was moving to the downside. Bitcoin really was underperforming. But once risk was bid again, we saw Bitcoin outperform. Bitcoin is, it's gold's little brother. If you just think about, let's say that everyone who's buying Bitcoin right now, it's only a matter of time until they have children, and just through that transmission alone, Bitcoin grows in value, right? And I always say this, it's a matter of how long that takes, though, because something going up 2 times, 3 times in 30 years is way different than something going up 2 times, 3 times in 5, right? In terms of risk, from a risk-adjusted return standpoint, from time value money standpoint. So yes, we're seeing, to answer your question, we're seeing gold and Bitcoin show, degree of correlation right now. The only correlation I'm really worried about, I just trade Bitcoin kind of independent of anything else right now, is if we have a major move to the downside with traditional markets. And I'd probably be paying attention to that correlation a lot more. So paying attention to ES pays right now, because if we have some type of major event downside wise, then I would really want I would start paying attention to Bitcoin if we see another major deleveraging. But I don't know if we'd get the extent of what we saw originally. Okay. Any thoughts on equities booming, eventual pullback? Oh, I think I just answered that. EOS. Okay. Bookmap. Yeah, I actually had Bookmap. I was a tester for a while. Bookmap is great. Yeah. It is great. It does offer you a free version. It is, caters to very short time frame order flow scalpers. There are plenty of great platforms, right? So the one thing is that there are many ways to skin the cat in markets. There are many things you can use. Ideally, you want to use a platform that is accessible on multiple levels and on multiple platforms, rather, because there are some people that are now using proprietary platforms that sort of they create their own tool, and they, identify where certain liquidity is within the market, for example. This is proprietary. It's not something you could find on many other places besides its own. And the danger in that is that if something happens to that, if it's gone, you have to be able to operate without those tools. So I love Bookmap, but I've just been I guess this gets back to the point of, I've just been so used to using footprints on Sierra charts that I haven't really seen it necessary to get into Bookmap. And for my time horizon, I think that what I'm using right now is perfect. I used Bookmap, like I said, for a little while, but it was just, I was starting to get really into gear. When new tech came out, if you think about how much things have changed in the last few years, when new tech came out, of course you want to explore everything. But I noticed very quickly that, as it boils down, it's not the tool, it's the person using it. So I'm happy with using what I've used. I can't say enough that you have to try out everything on your own, though, because Bookmap is phenomenal, right? I've heard phenomenal things about Bookmap. I've heard terrible things about Bookmap. I've heard phenomenal things about Sierra charts. I've heard terrible things about Sierra charts. It's all a matter of, what fits you. So yeah, I give it my support absolutely, though. Very unknown coin, but no great company in Europe. U.S. Trust. Oh, UT Trust. I'm like, U.S. Trust. My friend's a portfolio manager for them. PayPal of crypto. Amazing move last 2 days, 150%. Well, yeah, let's look at that. UTK. What's the volume, though? Let's find out what the volume... First of all, let me make sure I'm looking at UTK currency. Ooh, that looks ugly on a 1 hour chart. Let's hope we find something else that looks better than that. Because otherwise... all right, so... It's on... Let's look at Qcoin. All right. There's at least... when you're looking at a chart... even on a 3-minute chart or 5-minute chart, if it's looking gappy, it's illiquid. If you have to go up to really high aggregation to see the bars cleanly, it's probably a bad sign. Now, this is something that's going to retrace its entire dump. I would probably put, I don't want to say anything dumb, but I would say that I'm 99.999999 repeating % sure that this is going to retrace this entire move. I would say, yeah. I'd say if it doesn't retrace this entire move, then, something has changed. But I hate to say certain, but I am, like I said, I would bet my money on it that it's going to retrace this entire move. And it doesn't matter what and just to be quite honest and frank with you, it doesn't matter what they say they're doing. Doesn't matter what they say. They're gonna, they're gonna replace PayPal. Well, so is Bitcoin. So is XRP. So is a ton of other things that have first mover advantage. And so we'll see. If this gains market share, and it'll show in the chart. It won't retrace this entire dump and make new lows. XMR is on a Phemex. Things don't have to be on Phemex for us to give you our analysis. I love Phemex, but it's still, it's a newer exchange. Phemex is not as liquid as Bybit yet, but it's going to be. But, I just call a spade. I'm not going to not chart something because it's not on Phemex. We're partnered with Phemex. I work directly with them. Josh works directly with them. We work with them as a team. We're on their core team as far as, helping them develop their presence, their education platform. If you go on their education platform, I put together those videos and material with another great guy within the space. And, it doesn't mean that we're not going to chart anything. So Monero, privacy coins, I do think that privacy coins absolutely have a place. Absolutely. In terms of the chart, not very attractive, right? Not the most attractive looking chart. You see the clear higher time frame resistance, and you see the clear loss of momentum. And you don't need to put an RSI on for this, right? So, and the problem with alts is they don't give you like the most desirable backside entries that maybe Bitcoin would be. So if you look at this structure right here, this roll that we had as well, okay, the structure really starts clearly defining itself. Okay, so here's your high, 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 okay, high, high. So let me redraw these precisely so that you could get at what I'm really pointing out. So what the market is telling you, here's your high initially, flips it as support, high, high. Notice how it starts staying between previous high and support, not able to escape this area. Losing strength, right? You don't have to use an RSI or these oscillators to see these things half the time. You can see them with your, just trained eye. So support, resistance, support, flips, resistance, support. High time frame resistance. Spending a lot of time there, right? Spending a lot of time between these 2 points. Okay, so you're just starting to see that it's losing that upside momentum. In terms of this, I can't buy this right here. I can't buy that right there. I can't buy it until the story changes with regards to where the structure currently sits, right? So I can't buy it until it's above this cluster that it's having trouble out within right now. In terms of shorting this, if I had access to, I would look to short the breakdown of any one of these lows the same way this worked, right? It's probably going to move away from you pretty quick, but if you break at any point, any one of these lows, you're probably going to move very quickly to the next. So nothing really that I see here that really stands out. All right. Nano. So XMR Nano. So as far as Phemex, all suggestions are taken. And, like I said previously, there's a lot of things that are coming up. And that's not me just saying, a lot of things are coming up. That is the truth. They are working on a ton of things right now, that so much so that even when I have a new idea, I feel bad about, because where it's myself and Jack and Cecilia and Federico and Max all in the chat, and I have an idea pops up, and then I mention it, and I feel bad because they're working on so much right now. But one of the things is adding more pairs. Well, adding more pairs is a must. Any exchange is going to be doing that, but hopefully they're going to do it in a smart fashion or intelligent fashion. You don't want to get yourself in a position like these exchanges that have all these dead assets on, that are really just, it's kind of like a sore thumb, right? It's kind of an embarrassment when an exchange has a coin on that is floating around for 5 BTC volume, and then some influencer talks about it looking great. Let's go to I think ENG was one of them I was looking at. Let's go to ENG. Okay, so ENG by structural, from a structural point of view is, and when we were going through the other day, we marked out these structural levels on the weekly. So here's your weekly low. This is just how we filter charts. Is this something that I'm going to be trading and pushing? No, this is just how I'm saying for you to go about filtering your charts. So you can see that we're approaching this weekly level again. And the point of this is not to chart ENGs. Use this as an example. So we're approaching this weekly level again. A buy signal for yourself, right? Without needing to take it from an influencer. And I hate to use that term because, I get called an influencer, but I was a trader first and foremost for over a decade. So, and if you break above this level, not to lose my train of thought, break above this level, we're reclaiming a level within market structure that was support previously, higher time frame support level, major swing point, obviously, major contextual level. Now resistance, we lost it. If we regain it, maybe the story is that we're going to move upward at least to this high. Okay, fair enough. So the problem is that you'll have someone who has 75,000, 100,000 followers. They'll get in a position in this. And we'll just go to this chart real quick. They'll get in a position with this, and you'll see this in a second. Bear with me. I didn't have all of this prepared. So advanced, we'll go to ENG. Okay. BTC, ENG, there we go. All right, so they're going to get in a position right around here. And maybe they're thinking, I'm going to start adding in position well into this low. So they're dollar cost averaging their position in. And they're in position comfortably after it took maybe a week or 2 or 3 weeks to get in. This is something they've been accustomed to doing for some time, helping the market turn. The volume is 39 Bitcoin. Okay, so 39 Bitcoin is a joke. 39 Bitcoin, I could just use my 39 times what's the price of Bitcoin right now? What is it? Was it 9,750? Something like that. We're looking at, wait, was that it? 39 times 9,780, who knows? $381,000 in volume. That's absolutely insane. That's, that is the midpoint of my normal position for Bitcoin. So the fact is that once they get in position and they share this chart, say 100 of you buy, say 50 of you buy, say that they convert 1% of their volume to buy, any buying activity in this order book is going to destroy it. It's going to immediately lift every available offer. It'll take up all the liquidity. Any market maker that's on this book is going to step out of the way of volatility. It's probably a bot at this point. And is going to step out of the way of order flow toxicity. And this is going to fly. And guess who's going to keep buying it? You're going to keep buying it because it's mooning. And you're going to be buying their sell orders. Okay. So that's why I don't really like to chart alts. And, it is what it is. But these are just the dead pairs that are listed on Binance. Look at this. I mean, if you thought 39 was a joke, let's just look at it really quick. What's that YouTube skit? Would you look at it? Would you look at it? 4 Bitcoin? Seriously? 5 Bitcoin? 6 Bitcoin? I remember the end of 2017, 2018 beginning. It was absolutely insane. You could throw money and it would quadruple. And that's the reasonable growth. It would 10 times over. But the volumes were insane. This is absolutely disgusting. So anyway, a little bit of a rant. But I know the deal. I'm not stupid. This happens in every asset class that can be moved with penny stocks and with altcoins. It's called being an activist investor. It's like George Soros. You know, you put on a position, then you talk about it, and then you pump it up, and everyone else buys it. I've seen the same thing happen. When I used to chart in our alt here there, I would see that it would move up, 1%, 2%. And that was from my small following when it was around 10,000. So imagine what happens if you're someone with a big account. That's why Josh and I really don't chart anything that doesn't have a substantial amount of volume. Yeah, so hopefully that explains that, guys. So any other questions right now? Let's look at where we sit. So we have futures opening up in, looks like what we have like in half an hour. Yeah, we have about half an hour. So anyway, Bitcoin right now, let's go back to it. Let me just double check, double back, right back within value. Okay, so this brings me to, I guess one of my last points. You don't always have to be in a position, right? And you definitely don't always have to be in position when you're back into an agreeing area. Okay, so regardless of this pump down here, regardless of this sell up here, we're back within a value area. And it's important to understand the context of this value area. It's been this value area now for, like I said, I established this from the first 3 days of this structure. Or it might have been 4 days. Yeah, it was the first 4 days of this structure. So it's maintained itself ever since then. So for some reason, that 9,800 level and 94 level is very important. As long as we're between this level, the only trades I'm really going to take are something that are any trades that are developed by microstructure. So any signs of strength in microstructure or signs of weakness. And right now, we're kind of bouncing. This is the point of control from this composite. So just to get that precise level. So the point of control from a volume standpoint is right around 9,667. And that's where that's the most fair value level between this entire structure. So we're at, we're $50 above that. We're $50 above the most agreed level between buyers and sellers. So if buyers and sellers are smart, and they've figured it out, then this is where they're agreeing the price is right now, and it has been for a while. Then why would we get in position there when there's really less of a chance for an imbalance to occur at fair value at the point of control than anything else? Yeah, it does like to wreck weekly candles. So I'm trying to think of anything else we might want to cover. I feel like we covered a decent amount in this. And let's look at this opened up really quick. So first trend day, really. Not exactly a clean trend whatsoever, right? It's more like a normal variation / trend. If we open it up, we'll see that in terms of trend, half of it, it's a normal variation essentially. Not a real trending structure. Moved down with conviction, but again, didn't really lose that area. And then squeezed back upward. This setup right here, this is something that I do not fade. All right. Two things: higher time frame context, previous composite level. Okay. Right under that, that's not marked on this chart, is that monthly swing level into a level. So now we know, and this is going to make sense after the course. One of the first things we have to do is identify, what the playing field looks like. All right, where the barriers are, where those levels are, where those reaction zones are, those participation zones, whatever you want to call them. And feel free to come up with your own name for a level, right? Price action traders for the longest time were sort of these esoteric, very, it was very jargon rich. And you had to have you had to know the certain phrase for what a cluster was. It's very silly. It's a level where buyers and sellers interact. It's a battle zone. So these are the levels that we know to look for traders getting trapped off sides. So now you have a higher time frame level, and I don't fade this. Okay, I definitely don't fade that. When you have this and price is clearly moving upward, or the opposite where price is clearly moving downward, all right, just take this into consideration. This is the most true representation of strength and weakness and absorption, all right? and absorption and acceptance through a level if we're continuing upward with price action. So the fact that we have one that is this blatant, or as I've used before, I've said flagrant, going back to flagrant foul, is not something that I fade. Okay, this is, some people might say, why are you sharing an edge? It's not the edge on its own. It's the activity that goes into developing an edge, right? It's one of the signs that we look for. It's one piece of evidence. We're building a case, right? It's just one piece of evidence. All the other things that make a trade are just as important. But the thing is, once you see this at an important level, whether it's the high or the low, this is telling you that someone is stopping that movement. It's telling you that someone is stronger, right? It's telling you that someone is also offsides. So when I see this, I do not fade it. And if you're wondering why, this is something that is actionable more often than not, well, it is very actionable in this type of market. This market is still very inefficient, right? It is very inefficient still. You still have people that are trading it based on moon rotations, right? And nothing against anyone who does that, but it's a very immature market still. These tools, they might be intimidating to someone who, is still trading basic baby pip stuff or basic, basic moving averages and learning the basics, right? But this is where it really boils down to what's going on between buyers and sellers. Until order flow came around, you just kind of had to figure out who was stronger based on candle structure. Now we know if there was volume above the candle, below the candle, if their hammer candle actually had people trapped below it, or if there was actually more volume above it, right? It's not important. If a hammer candle looks like this at the bottom of a range, let's say price came down to it, and that's your hammer candle. Big difference if the volume is down here. This looks strong. This looks like maybe it's turning, right? Volume up here, down here, price still able to close above it. Big difference then if all the volume is occurring. Let's say we have a hammer candle looks something like this, where you got a little bit of a wick on the upside, and you have all the volume up here, right? Not necessarily the strongest case for a move up. Maybe some short-term aggression up, but there's really no one trapped down here, right? There's no one to get above. And that's what we're trying to do. We're always trying to find a level to get above. When I look at footprint charts and I see, why is this setting like that? There we go. When I see on a footprint chart that, and we'll go down to my reversal setting. When I see, for example, that, there's no real trap down here yet. We would need to ultimately be above this level or even this level. When I see that this is taking place and the market is moving sideways still, I know that the best shot we have at a long is getting above where this volume is, because it leaves them behind. As long as we keep continuing through the level where volume came in, sellers can continue to walk it down, right? There's no sign that they're offsides yet. I think that kind of covers it. I think we've gone over a lot of stuff in this live stream. Good night, Luke. And, oh, you're a doctor? That's amazing. You know what? Even, anyone can just give thanks to doctors in general, because the work you guys do, it's the most honest and beautiful work there is, right? Being a doctor. So have a great night, and by all means, we'll be doing this again very shortly. Yes, so this video will be available on YouTube afterwards. I think we're going to wrap it up. We covered quite a lot. We went over the new Discord, which I'm so pumped for, because, oh, nice, there we go. Wow, amazing to see the increased communication now they're on Discord. The other platform is pretty quiet. Yeah, the other platform sucked. And, no shame in that. Hey, you can't hang on to your old beliefs, right? In markets or in anything else, right? When you find out that you're wrong about something, you got to just take your medicine. All right, guys. So I think that covers it. How long are we into this? We're into this about 1 hour and 10 minutes. Not as long as the other ones. They're usually 2 hours long, but I think we covered quite a good amount of content. If you're new, go to blockroots.com and check out our platform. And if you want to check out this platform for 2 days, here's the link. You go into there, and then what you do is you won't be able to see all of this stuff, but you have to go into free trial first and type trial, and I'll go ahead and enter you in. And we'll be uploading everything. Today I'm going to start uploading the rest of the stuff. I have all the market updates so far that we put up. So those are going to be separate. Last night it was late. I was beat, guys. After setting everything up, I'm new to Discord. I had a Discord previously. I did a few videos. I was on Trader Main's podcast a long time ago with Trader Matt. This was a few years ago, and I had Discord just for that, but I never used it. So I had to set this up in the best way possible. Yeah, I think hour is way better than 2. There's definitely a sweet spot. There's your Discord link, Nadim. So go ahead and hop on in and ask as many questions as you want, because a 2-day trial, it's not access to the Blockroots main platform, but hopefully you'll be able to get a little bit of a taste of what we're going over and why we have an edge in regards to the type of value that we bring and the type of material that we're discussing. So everyone's a student still. All right, guys, until next time, it's been a pleasure. Everyone have a fantastic evening, morning, night. And as always, exercise proper risk management and trade effectively.